being ready to intervene in particular where it's necessary to do so. It's not a case of either doing one or the other. Both general support and individual intervention are necessary. And we need, too, to work with other countries to tackle the causes of these problems, as well as dealing with their consequences. Mr. Speaker, let me briefly remind the House of what we've done to stabilise the banking system as a whole. Since April, the Bank of England, with support from the government, introduced the Special Liquidity Scheme providing funding to the banks. The government has made available in excess of £100 billion of long-term funding to be lent through the scheme, and the Bank of England has extended it till January. I'm willing to make further resources available as necessary, and the Governor has made it clear in these extraordinary market conditions that the Bank of England will take all actions necessary to ensure that the banking system has access to sufficient liquidity. The Bank of England also continues to inject substantial funds into markets through its normal operations, and it will continue to do so. Tomorrow it will put in another £40 billion, taking in a wider range of security, and these operations will continue into November. Mr. Speaker, we also need to deal with specific problems as they arise to maintain stability. In February, we took special powers to bring Northern Rock into public ownership, now seen by most people as the right thing to do. I can tell the House that Northern Rock has now paid back more than half of the taxpayers' money that was lent to it, and it continues to repay its loan ahead of schedule. In August, I announced that the government would swap up to £3 billion of outstanding debt for equity if required to strengthen Northern Rock's capital position. And in September, we amended the competition regime to allow the interests of financial stability to be considered in the proposed merger between Lloyds TSB and HBOS. And we took this exceptional measure because financial stability had to come before normal competition concerns. And 10 days ago, we had to deal with the problems at Bradford and Bingley. We transferred the savings business, the branches and the related jobs to Abbey Santander, protecting savers, and took the rest of the company into public ownership. We acted decisively to protect savers and also to protect the interests of taxpayers, ensuring the financial sector bears its share of the costs. Mr. Speaker, I've made it clear on many occasions that our priority is to maintain stability and protect the interests of depositors and safeguard the interests of the taxpayer. And I want to set out what we've done so far here at home and also to deal with developments in Europe over the weekend. The FSA has announced a further increase from tomorrow to the compensation limit for retail bank deposits to £50,000 per depositor, which means £100,000 for joint accounts. And this measure will ensure that 98% of accounts are fully covered. And the FSA is consulting on whether to increase this limit further to ensure that arrangements here continue to be comparable with international best practice. Mr. Speaker, I've always been clear that each country needs to do whatever is needed to deal with its own particular circumstances. However, I also believe that wherever it is possible to do so, countries should work together and act to maintain stability. This afternoon, in the last hour, all 27 European Union member states have reaffirmed the need to take whatever measures are necessary to maintain the stability of the financial system, whether through liquidity support, action to deal with individual banks, or enhanced depositor protection schemes. But in the light of what's happened over the weekend, it is especially important that EU member states work far more closely together. So tomorrow I will meet European finance ministers in Luxembourg to further discuss how we bring stability to the system and to protect depositors. Mr. Speaker, this demonstrates that every country in the world, Europe included, is being affected by these problems. And in the United States, Congress has now approved measures to support their banking system, which we welcome. Our approach has been different, but what has happened in America emphasises yet again the need for countries to take whatever action they believe is necessary, but also to work closely together, not just to resolve these problems, but also to try and prevent them happening again. And later this week, I'll attend the G7 and IMF meetings in Washington. Our aim there is to reduce uncertainty and to improve confidence in financial markets by increasing the openness of financial institutions' exposures. We also want to change and improve the effectiveness of credit rating agencies, and these measures are now being implemented, but I believe we need to move far more quickly. Here at home, there are a number of specific steps that are necessary. First, the Bank of England will continue to do whatever it takes to make cash available for banks to lend. Second, the banking bill will be introduced tomorrow, building on the special powers we took in February to allow us to intervene quickly and decisively. It will also give the Bank of England a statutory role to maintain financial stability to complement the role of the Financial Services Authority. Third, just as at an international level, lessons need to be learnt. We need to ensure that our regulatory system here is up to the mark. It's not about light touch against heavy-handed regulation. It's about making sure that we have the necessary rules in place and that those rules are enforced effectively. I've asked Adair Turner, the new chairman of the FSA, to make recommendations for reforms. And as recent events in the financial markets have shown us, regulation should be about liquidity as well as about capital, and that's why the FSA is considering changes to the liquidity requirements. And they're also looking at remuneration structures in the institutions they regulate. Fourth, we must do everything we can to ensure not only do banks have the confidence to lend to each other, but also that lending is maintained in the mortgage market, businesses and to individuals. I shall publish Sir James Crosby's recommendations on options for improving the functioning of the mortgage finance markets shortly. Mr. Speaker, these are exceptional times, and I'm in no doubt as to the size of the task facing us and governments across the world in bringing order to the financial system. The process of change will necessarily take some time to work through, and because we're dealing with international institutions and international markets, it will require action not only at a national level here, but also concerted international action. Mr. Speaker, it is right that we look at every aspect, liquidity, capital and regulation, with other countries and, of course, with the financial sector itself. But it would be irresponsible to speculate on the specifics of future responses. Indeed, providing a running commentary could add uncertainty in already febrile market conditions. But, Mr. Speaker, I want to make clear that all practical options must remain open to us. And I've made it very clear that the government is ready with the resources and the commitment to do whatever is necessary, and I will keep the House informed. Our priority at home and abroad is to bring stability to the financial system, to ensure depositors and savers are protected, and to defend the interests of the taxpayer. I commend the statement of the House.